forever free trading education. If I'm ever charging you money, it's because my trading's not making money. So if I ever need to hustle a side income, it's not going to be from selling courses. Now, video of the day, we're going to talk about asset selection and trends. And this is from my own insight about certain assets I'm going to stop trading and certain assets I'm going to start trading. So welcome in, fam. Much love. Trap here. So I'm just starting with some suppositions. I'm not telling you that you need to believe me, but I believe that it's better to trade the daily chart at a time when you're very sharp. You could do it over the weekend, you could do it at the open, you could do it at the close, whatever, and let the market play out over time. When you're making fewer trading decisions, the drawdowns are less severe, you're making better decisions, you make fewer mistakes, and you allow the market to do what it naturally wants to do, which is trend. Well, some markets naturally want to trend, some markets don't. So let's talk about that. Now, if we decide that hey, I'm just going to trade an hour a day, 30 minutes a day, I'm going to trade the daily chart, it's much easier to trade a trend following or swing trading system than a reversal system. So, I mean, you can trade, or not reversal, mean reversion. Mean reversion is generally going to be a lower time frame thing where you have to monitor the position and get out when you're given an opportunity. But when you're trading the daily chart, if you're trading the daily chart, it makes sense to try to follow trends, stay with position for longer, advance your stop, run up the R, whatever. So this is how I've got here. It's like I'm trading trends because I'm trading the daily chart. These things go well together. And then the third piece of the puzzle is I'm trading prop firms because they shift the risk from an individual trade to the sample. They give insane leverage and they have asymmetrical risk reward to pay out. So those are the three pieces of the puzzle for me. That's a review coming into this. So the question here is what causes trends and which assets do you choose that cause trends? So there's a few things that cause trends, and trends not just in assets but in the world. What causes trends? I would say change causes trend. Change goes with instability. Strong narratives, cultural differences cause trends. Culture's changing. These are some of the things that cause trends. So what we're going to also talk about what causes things to be fixed, right? So one of the major causes of trends is where there's a change in instability is printing of fiat money. If the money system expands, then stable assets trend towards infinity, and we see this over time. The stock market trends towards infinity, gold trends towards infinity, and Bitcoin trends towards infinity. Now, it doesn't mean that these things can't go into bear markets, and they can, but the default of these things is to go up simply because they're printing money. Now, I like to trade downtrends on these things too, but these things tend to trend for that reason, right? On the other hand, what are things that don't trend? So, okay, what causes trends? Let's write some things down. Fiat money printing is one. Instability would be another. Change would be another. A narrative would be another as well. So, for example, I was looking at the chart for the Hong Kong dollar today. Next time you trade, you're on TradingView, go look at the Hong Kong dollar. What's interesting about the Hong Kong dollar is they're pegging it to the US dollar. It's in like a 1% trading range for many years. Go dogs, go outside, dogs. Go. Go dogs, go outside. I'd like them on the bed, but they're gonna knock the camera off. So the Hong Kong dollar isn't a good one to trade because the price doesn't really move, right? I need to look at closer. Maybe there's trends within there, but the price doesn't move. Now, if the currency became unpegged and there was instability, it would start to lose value, and that's something that for sure could happen, and I'm interested in that in a trade in years ahead. But if so, generally, two fiat currencies, if they're equal strength, they're not really going to trend. So if you go into the euro chart, or you go into the pound chart, or you go into the Australian chart, and you zoom out on a weekly, it doesn't look like Bitcoin. It doesn't look like gold. It doesn't look like the stock market index. They just kind of go up and down. So the euro, the pound, and the Australian dollar, for the most part, are loosely pegged to the US dollar. These are similar cultures, similar people, similar monetary policy. They're in the same political alliances. They communicate with each other. They're trying to keep things stable. There's no reason why there should be really strong trends. So what ends up happening, and you can see this on the chart, is it's very rare for them to have 10 straight green days or 10 straight red days. Whereas with Bitcoin or with gold or with the NASDAQ, it happens sometimes. And that's where a lot of money can be made, just sticking with a trend following system. You never see GBP, EU, and AU double, quadruple in value. And you see that with the NASDAQ. You see that with gold. You see that with Bitcoin. It might take a little while, but it happens. You don't see that. It doesn't. Hey, dogs. Go outside, dogs. You smell good, but you gotta go outside. Okay, go outside, go play. Go play. So essentially, GBP, AU, and EU, they don't have a reason to trend. They don't really trend in the chart, and the way it plays out, if you're trying to catch a trend, you just get it's a lot of chop back and forth. And if you want to trade these, so I'm not going to trade these anymore. The plan is I've been losing money on them. I'm looking at the data. I'm making money on the indices. I'm making money on crypto. I'm making money on gold and silver. And there's other ones out there. There's oil and so on. So I'm looking at other charts, but I'm losing money on these. So what am I going to do? Well, I could have a system where mean reversion works a lot better for these, because if they're stable, if they're trying to keep them stable, they're going to mean revert. If there's a sharp move, they come back. And this is why, I don't know if any of you guys know about NERP. I do not recommend investing with NERP, but they have a martingale algorithm that hasn't blown up yet. Well, for some people it has, but with a martingale system can work on these currency pairs where you double down on losers and they come back, where that would never work on NASDAQ or Bitcoin or gold, because the trend can run too far and you blow up too easily. So if I'm trading daily, I'm trading trend, I'm trading prop, where do I go? Well, I cannot trade stocks, individual stocks. There's a couple of them, but there's few. But the stock market trends nicely as well. But I can't trade low caps. Maybe later I'll come back and do that in personal account, but I'm not going to do that now. I also cannot trade agricultural commodities because of the weird hours. But what I've noticed is the yen trends nicely. The Chinese yuan trends nicely. The South African rand trends nicely. The Brazilian real trends nicely. Why is this? Well, we have cultural difference. These countries print money faster than the US. There's instability in these countries, and instability between the US and China. And there's more change. And we come back to narrative, but so for instance, rather than trading EU, GBP, USD, it's like trading ETH BTC, like it's just it doesn't make sense. It doesn't make sense to me to do. Now, there's times when there could be a narrative, like Brexit was probably an opportunity to create some trends in the pound, right? But the ideal scenario would be perhaps trading the Russian ruble during the war, or perhaps if the Hong Kong dollar comes unpegged, trading that. But you see, the fiat money printing, actually, some of these countries inflate faster that have higher inflation. Like you can trade the inflation difference. If Brazil has much higher inflation than the United States, then we want to be the trade is long the dollar, short the Brazilian real, right? So I spent today, aside from the trades that I put on, I went and took a bunch of screenshots and downloaded historical price data of. I started today with the rand and the yuan, and the real and the Danish kroner look good too. But I'm gonna go print those out probably Friday or Saturday, and then start learning and reviewing those. But yeah, if we're looking at trends, like why should the U.S. dollar and the EU dollar trend? Like they're the same thing, right? We want cultural differences. We want the instability of small countries. We want some kind of narrative or catalyst to come in. I wouldn't say we want war, but if you look at the Israeli shekel chart, the war caused a couple nice trends: a strong up move, then a strong down move in the Israeli shekel. So yeah, it doesn't make sense. I want to trade weak currencies against the dollar, and I want to trade strong stores of value against the dollar, and not trade too stable assets. It doesn't make any sense. Okay, hope you found that useful. Much love, and let me know what you think in the comments. Peace.